Welcome to AI Market Brief. In this special episode, we're decoding FAANG's Q2 2025 earnings. Today we'll dive into Meta's eye-popping plan to pour as much as $72 billion into AI capex, and Amazon's signal that its own AI build-out could top $100 billion as AWS growth continues to accelerate. Buckle up. The scale of these bets is reshaping everything from chip supply chains to data center real estate.
Yeah, we've done a massive amount of research to synthesize the major trends.
The financial results, strategic shifts around AI, and how U.S. policy could heat up or dampen this growing frontier.
That's absolutely right. Our mission today is to unpack the Q2 2025 earnings for the major players, including Meta, Apple, Amazon, Netflix, and Alphabet, collectively known as FAANG.
But going beyond just the headlines.
Exactly. We're pulling insights from the financials, AI research, market analysis, and this significant new policy piece, the US AI Action Plan.
All right, let's get started. So maybe we should begin with this core concept driving so many of these huge investments, superintelligence. It's a term you hear constantly, but it seems like it means different things to different experts.
At its core, superintelligence, it describes an AI that vastly surpasses human cognitive abilities pretty much across the board. Nick Bostrom at Oxford defined it as an intellect that's significantly better than humans at nearly every task.
Not narrow AI like chess or Go.
Exactly. It implies something far more capable than even the smartest human minds at, any intellectual challenge you could throw it at.
Okay, that sounds pretty intense. So what are the timelines people are talking about for something like that?
Well, that's where the experts really diverge. You've got someone like Andrew Ng, a huge name in AI, more focused on near-term AGI, artificial general intelligence, as AI that can do any intellectual task a human can.
Okay, AGI first.
AGI, right. And Ng is, frankly, pretty skeptical about superintelligence being a near-term threat. He had that famous line, worrying about evil killer robots today. It's like worrying about overpopulation pollution on Mars.
So he sees it as extremely far off. Current AI is just narrow.
Pretty much. But then you contrast that with someone like Jensen Huang, CEO of NVIDIA. Big difference. He sees AI handling really complex tasks at superhuman levels very soon, like within years. He predicted AI could pass any human test by maybe 2029?
Wow. It's much sooner.
Much sooner. And his view is really optimistic. He sees these capabilities as a positive force, something to augment human productivity. AI writing software, designing chips, analyzing supply chains. Stuff beyond what humans can currently do.
So, okay, experts agree superintelligence means AI smarter than humans. But the timelines and the urgency, totally different views.
Exactly. And there is this whole philosophical debate, too, about consciousness and whether we already have narrow superintelligence and things like AlphaFold for proteins or Deep Blue for chess.
And why do these different definitions matter so much for, say, the companies we're talking about?
Well, it directly shapes strategy. It shapes how quickly companies invest billions in AI research and infrastructure. It influences how policymakers think about regulation. And ultimately, it affects how fast these AI capabilities actually show up in the products and services you use every day.
Let's pivot to the Q2 2025 earnings reports for FAANG. It seems like AI is the unifying theme everywhere you look. What's the overall vibe from the results?
Generally, the picture is strong. Most of the FAANG companies delivered really solid Q2 results. We're talking revenue growth between, say, 10 and 22% year over year. Profitability looked healthy, often beating what analysts expected.
And AI is the driver, or at least the justification for spending.
It's definitely the unifying theme. Every single one of them is ramping up AI investments, seeing it as the engine for future growth. It's not just talk anymore.
Okay, let's start with Meta. They had a massive quarter, apparently.
Yeah, Meta's numbers were huge. Revenue up 22% year over year, hitting $47.5 billion. Net income jumped 38% to $18.3 billion. Operating margin improved to 43%, which is pretty impressive.
Driven by ads, I assume.
Primarily, yes. Ad revenue was the main engine, 98%. Impressions were up 11%, and the price per ad went up 9%. They credited their AI-powered ad tools for a lot of that efficiency and targeting improvement.
What about Reality Labs, the metaverse bet? Still losing money?
Oh, yeah. Still reported a $4.5 billion operating loss. But the expenses there grew kind of slowly. The really eye-popping number for Meta, though, is their projected capital expenditure for 2025.
How much?
Between $66 and $72 billion. A huge, huge increase. And it's explicitly for building AI compute capacity. This signals a massive strategic bet, maybe even a pivot, beyond just ads eventually.
Definitely. What about Apple? They have a different approach to AI, more on-device and privacy-focused. How did they do?
Apple also had a record June. That's their fiscal Q3. Revenue hit $94 billion, up 10% year over year.
Driven by iPhone and services.
Exactly. iPhone was up 13.5% to about 44.6 billion, and services grew 13% to 27.4 billion. Their focus is clearly on Apple Intelligence, emphasizing that privacy-preserving on-device AI.
Are they spending big on infrastructure too, or is it all on the chip?
They're increasing capital spending for AI, their CFO said, but, quote, not exponentially. So it signals a different strategy compared to Meta's giant data center build-out, more distributed maybe.
Got it. And Amazon, AWS is always a key indicator for enterprise AI adoption.
Right. Amazon had strong net sales, $167.7 billion, up 13% year over year. Operating income really soared, reaching $19.2 billion. And AWS revenue grew 17.5% to $30.9 billion, likely driven by demand for their AI services.
But any cautions there?
Well, their guidance for Q3 suggests operating income might be flat year over year. That implies they're spending heavily right now on AI infrastructure. They're planning to push CapEx over $100 billion in 2025.
Another massive number, mostly for AWS AI capacity.
Primarily, yes. It's absolutely core to Amazon's future profitability.
Okay, Netflix, different beast, focused on content. How does AI fit into their story?
Netflix had what they called a blockbuster quarter. Revenue up almost 16% to $11.1 billion. Earnings per share jumped 47%. Operating margin hit a really impressive 34.1%.
Still benefiting from the password crackdown in the ad tier?
Definitely. Subscriber momentum is strong, and that cheaper ad-supported plan is really catching on. Nearly half of new US subs are apparently choosing it. But here's the key AI insight. They specifically highlighted AI-driven production efficiencies.
Like using AI to make shows cheaper or faster.
Exactly. AI speeding up visual effects. They mentioned their series, the Eat or Not VFX work, was done 10 times faster using AI. That can really start to bend the cost curve for content creation.
Video has seen major advancements. Finally, Alphabet, Google's parent. How are they looking?
Alphabet showed a return to solid growth, consolidated revenue up 14% to $96.4 billion. Google services search YouTube ads up around 13%.
To Google Cloud, that's their AWS competitor.
Google Cloud surged 32% to $13.6 billion and achieved solid profitability, $2.8 billion in operating income. They mentioned AI overviews in search and AI mode driving user engagement.
And they're spending.
Their CapEx projection for 2025 is $85 billion. Again, a significant jump, mostly for AI-optimized data centers to power everything from search to their cloud AI offerings.
So the takeaway here is major companies are betting the farm on AI, pouring literally hundreds of billions into it.
Absolutely. It's changing their investment posture, their strategies, and ultimately the features and services that we're going to interact with.
This leads us perfectly to the next point. Behind all these AI features, there's this massive, often invisible investment into AI infrastructure. What exactly is AI infrastructure?
Right. So AI infrastructure isn't just one thing. It's this integrated stack of hardware and software. Hardware means specialized chips, GPUs, TPUs, servers with tons of memory, super fast networking.
Plumbing, basically.
Exactly, the digital plumbing. And the software includes machine learning frameworks, data pipelines, and the cloud platforms themselves. It's all optimized for crunching huge data sets and doing calculations in parallel, which is what AI needs. It's what you need to build, train, and actually run these big AI systems at scale.
And the scale of this AI infrastructure really demonstrates where the space is going.
Definitely. Take Meta again. They're building what they call Titan clusters. Prometheus is set to be the first gigawatt plus cluster. Hyperion might hit 5 gigawatts eventually.
Gigawatt, like enough to power a city.
Hundreds of thousands of homes, yeah. These are unimaginably huge energy-hungry data centers, packed with the latest GPUs. That's the backbone for their AI future. Consumes immense resources.
It really does sound like building power plants just for AI servers.
In a sense, it is. Then you have AWS. They offer all the ML services plus their own custom AI chips for training and running models. And they're spending that $100 billion plus largely on building out AWS's AI capacity. It's the profit engine and the enabler for so many other companies doing AI.
Now, Apple's approach is different, you mentioned, more focus on privacy.
Yeah, Apple emphasizes on-device AI. The neural engine in your iPhone does a lot of the work locally that keeps data private, but they are also expanding spending on their own data center.
Interesting. What's the role of data centers in Apple's context?
For their private cloud compute. If a task is too complex for the device, it can go to their cloud. But the data is encrypted in a way that even Apple supposedly can't access it. So privacy remains key even with some cloud help, and they're designing custom server chips for this.
Interesting hybrid approach. And Google. They've been in this game a long time.
Google's probably the most vertically integrated. They have their own custom TPUs, tensor processing units, alongside massive data centers. They've been building this infrastructure for years to power search, YouTube, Translate, now Gemini and their other big models. That $85 billion investment, it's largely for more servers and data centers to keep pushing their AI lead.
So, bottom line, this digital plumbing is essential. It's what makes the personalized recommendations, the generative AI tools, everything possible.
Absolutely. They're investing to build the computational foundation for the next era of AI experiences that we'll be using. It's largely invisible, but immense and critical.
Okay, so let's talk about the shifting sands of ad revenue, especially for the companies that rely heavily on it and the broader economy.
Yes, there's definitely some disruption happening. One key thing is AI-powered search, Google's AI overviews, and these new agent-based browsers.
Essentially, if you get your answer directly from the AI or the agent handles the task, then users don't click through to the website with all the ads.
Exactly. Users bypass the ad-laden interface. A hint of this in Google's Q2 results. Their network ad revenue ads on third-party sites actually dipped 1%, while on their own properties like Search and YouTube grew 22%.
The value continues to shift from the source, the website, to the answer itself. We discussed the agents and browser wars on the brief a few weeks ago. Now we're seeing the hard numbers on impact, the evidence.
Yep. And we're seeing the platforms adapting. Google, Microsoft, Bing, they're already integrating ads directly into the AI-generated answers. Microsoft even reported surprisingly high click-through rates on those.
So ads within the AI summary.
Oh, and forecasts suggest this could become a big market, maybe $26 billion for AI-driven search ads by 2029. So it's less about ads dying and more about a strategic shift, trying to make the AI itself a new place to show ads.
Okay, what about the wider economy? Ad spending is usually one of the first things cut in a slowdown, right?
That's an important point. Ad spending is notoriously cyclical. When consumers get nervous, pull back on spending, or when businesses worry about a downturn, marketing budgets get slashed. We saw this clearly with Meta back in 2022, their infamous ad slump, where revenue actually dropped year over year for the first time ever.
And are there signs of a slowdown now?
Well, forecasts for 2025 suggest the labor market might cool off a bit more. If that happens, people have less disposable income, confidence drops, and that usually leads to less ad spending.
And Meta, you said, is particularly exposed.
With something like 98% of the revenue coming from ads, yes, they are very sensitive to this.
Are we seeing any direct signals from consumers? What did Amazon's Prime Day tell us?
Well, we don't have formal numbers on Prime Day. Those will be reported by Amazon in Q3. However, it is an interesting indicator. The preliminary numbers for Prime Day 2025 suggest that Prime Day was up over 30% year over year.
Sounds like booming confidence.
Not necessarily. A lot of that growth seems to have been driven by deep discounts. Electronics were like 23% off, apparel 24% off. The event was 2 times longer as well. It suggests consumers are really price sensitive right now, hunting for deals, maybe only trading up when there's a compelling discount. Not exactly unbridled spending.
So cautious optimism at best, bargain hunting.
More like cautious bargain hunting. And the types of goods purchased are reportedly different. Many customers leverage Prime Day to get deep discounts on household essentials.
Interesting.
It will definitely be interesting to see the formal Prime Day results in Q3 earnings.
Okay, let's shift gears to another huge factor, government policy. This can be a massive tailwind or a serious headwind. The Trump administration recently released the 2025 AI Action Plan. What's the main thrust?
Well, the plan leans heavily towards deregulation. The stated goal is to create conditions where private sector-led innovation can flourish.
Meaning less red tape for tech companies?
Pretty much. It directs federal agencies to get rid of onerous rules that might hinder AI development. It even suggests reviewing past FTC investigations if they're seen as unduly burdening AI innovation.
So, potentially lower compliance costs, less legal risk for big tech?
Generally, yes. The idea is that this encourages more private investment in AI. Of course, critics are warning this might just end up enriching the big incumbents, giving them sort of free rein.
I also heard about something related to woke AI.
Yes, there's an accompanying executive order. It requires AI models used for federal funding or contracts to be free from ideological dogmas such as DEI.
So, companies selling AI to the government might need to adjust their models.
They might need to demonstrate or ensure a kind of ideological neutrality, at least for those specific government contracts.
Okay. What about AI infrastructure? You mentioned the massive building efforts. Does the plan address that?
Oh, absolutely. This is a centerpiece. The slogan seems to be "Build, baby, build." The plan aims to speed up the expansion of data centers, chip factories, and the energy facilities needed to power them
How so?
by streamlining permitting processes, things like categorical exclusions from lengthy environmental reviews, expanding fast-track approvals. This is a direct benefit to Amazon, Google, Meta, Apple, anyone racing to build out AI compute capacity. It could potentially speed up timelines and maybe shave off some costs.
And it supports building chips domestically, too.
Yes, it supports domestic chip development, which helps companies designing their own silicon like Apple, Google with TPUs, Amazon with Trainium, and Meta's custom chip efforts.
That sounds like a significant policy boost for their CapEx plans. What about data access and privacy? Always a tricky area.
The plan talks about increasing data availability for AI development, mainly by opening up more federal data sets. But what's really notable is what's not there. It's very light on new privacy regulations.
So, no new federal rules on how companies use data for AI.
It seems to step back from pushing for new federal mandates or enforcing strict checks for algorithmic bias. This gives big tech more flexibility in how they use data, which they generally favor.
But that might clash with consumer expectations or rules elsewhere, like Europe.
Exactly. It contrasts sharply with Europe's AI Act, which is much stricter on privacy and bias. So it favors flexibility for US tech firms, but potentially creates divergence globally and might raise consumer trust issues for some.
Okay, how about competing geopolitically? Any focus on export controls?
The plan includes strong export controls. The goal is to deny some foreign governments, specifically mentioning China, access to the most advanced AI chips and the tools to make them, the keys to protect the competitive edge of U.S. tech companies.
So protect the lead, but also sell to allies.
Right. It also aims to make the U.S. an AI export powerhouse. This could create new revenue streams for cloud providers like Microsoft, Google, and Amazon selling AI services abroad.
How does this affect Apple, given their China exposure?
Apple's in a more delicate spot. Yeah. They rely heavily on China for manufacturing and also have a large customer base there. So stronger U.S. export controls could increase their risk. It's a tricky balance for them.
And finally, what about antitrust? With these companies getting even bigger in AI, is the plan looking to increase scrutiny?
That's another notable point. The plan seems pretty light on aggressive antitrust measures, specifically targeting big tech's dominance in the AI space.
So the thinking is deregulation itself will foster competition.
That seems to be the philosophy, rather than focusing on policing market concentration directly. The industry likely sees this stance as a green light to move faster on AI products and make even bigger bets without imminent antitrust threats hanging over them.
Okay, so putting it all together for you, our listener, this US AI action plan seems to largely align with big tech's current strategies. It acts more like a catalyst, right?
Yeah, it seems designed to accelerate investment and make it easier to monetize AI at scale.
Which means the AI features and services you encounter will likely develop and roll out even faster now, shaped by this policy environment that clearly prioritizes speed and innovation, perhaps over stricter regulation.
It really highlights this powerful alignment between government policy pushing the AI frontier forward very, very quickly.
So we've covered a lot today. We've taken a deep dive into the complex world of FAANG's Q2 2025 earnings, superintelligence, AI infrastructure, and the economics and policy headwinds underpinning it all.
As this AI revolution really hits full throttle, what shifts might you think are most important to watch out for? I'm James.
And I'm Caitlin. Thanks for listening to AI Market Brief. Subscribe to the LinkedIn newsletter and follow on YouTube. Join the LinkedIn debate. Until next time.